Hello, hi, my name is Honorable Rogers, and welcome to my channel where we break down the world of financial accounting one step at a time. If you are new to accounting, you are in the right place. Here we will explore the fundamentals of financial accounting with simple, easy to understand lessons designed for you. Whether you are a student, a professional looking to brush up on your skills, or someone curious about the nuts and bolts of accounting, you will find valuable insights and practical tips in my videos. From understanding the balance sheet to mastering the entry bookkeeping, we'll cover all the basics you need to get started. Don't forget to subscribe and hit the notification bell so you never miss an update. Let's dive into the fascinating world of financial accounting together. Here is accounting essentials from basic to final accounts. Yeah, we're going to be looking at accounting in total, but we're going to start from the scratch, bit by bit, until we get to the end of financial accounting. We'll study together. It's a long journey, and I pray God Almighty help us go through this. So now, the topics I'm going to considering. The first one here we have bookkeeping and accounting. What is bookkeeping and what is accounting? What is the difference between these two terms? Then principles and practice of double entry. Then subsidiary books and source documents. The principal books, which is the ledger, the cash book, talk about double column, three column, petty cash book, then the trial balance, the bank reconciliation statement, then the journal, which is principal journal. We will talk about correction of the errors, then suspense accounts, reserves and provisions, then depreciation of fixed assets, the final account of a sole trader, then control accounts, accounting concepts and convention, accounting concepts and convention. Okay, let's get started. Let's start with the first one. Then we have bookkeeping and accounting. Okay, our first topic is bookkeeping and accounting. What is bookkeeping and what is accounting? These two things, do they mean the same thing or they are not same? We are going to find out. Okay, let's start. Bookkeeping is the systematic recording of transactions on a daily basis in the appropriate books. In its simplest terms, it involves keeping a record of all the money coming in and going out of a business, both cash and credit sales or credit transactions. Bookkeeping is the foundation, the bedrock of accounting. It is like a building. You need a strong foundation for the building to stand on. Bookkeeping is that foundation that you need to prepare an accurate financial statement. Bookkeeping starts from recording the first financial transaction of the business and wraps up with the preparation of a trial balance and necessary adjustments. Like I said, bookkeeping starts from the recording of the first financial transaction of a business and it wraps up with the trial balance and other necessary adjustments. Yeah, that is a bookkeeping. As you can see from the diagram, that means it starts from recording and it ends with the trial balance and other adjustments. That is bookkeeping. Now, okay, now let's look at consider two terms. These two terms, recording and posting. What is recording and what is posting? Okay, what is recording? Recording refers to the initial entry of financial transaction into the accounting system. This is done through journal entries, which document details of each transactions, including the date, account affected, amount, and a brief description. That is recording. you record to the subsidiaries books of accounts. While posting, it is the process of transferring the recorded journals to the general ledger accounts. The general ledger is a comprehensive collection of all accounts used by the business where the balances of each account are maintained. That means you record to the subsidiary books of accounts while you post to the ledger. Okay, let's go ahead and see what accounting is. Okay, accounting on the other hand, it is the process of identifying, recording, classifying, measuring, interpreting, and communicating financial information of an organization to end users and to enable end users to take an informed decision. Accounting encompasses bookkeeping and much more. Bookkeeping is a segment of accounting. Yeah, like I said, bookkeeping is a segment of accounting. Like I said earlier, bookkeeping starts from recording the first financial transaction and it wraps up with the preparation of trial balance and other adjustments. While accounting starts from recording and it ends with reporting. That means where bookkeeping stops, accounting continues. Yeah, like I said earlier, bookkeeping starts from recording and it ends with the preparation of a trial balance and other adjustments. That means that's to say, a bookkeeper helps to prepare all the accounts necessary to prepare the final accounts. As you can see from the diagram, accounting starts from recording and it ends with reporting and it ends with reporting. So that is all about accounting and bookkeeping. Please bear in mind I said bookkeeping starts with recording and it ends with trial balance, while accounting starts from recording and it ends with the preparation of the final report. That means bookkeeping is a segment of accounting, while accounting covers all the three stages in accounting. So now let's go ahead and let's see the users of accounting information. I will be brief on all this. I think you should be able to lay hands on a good textbook or go online to see what they mean, what they need accounting information for. We have the management need accounting information, employees need accounting information, owners need accounting information, even the creditors, which are the suppliers. Then we have the bank, especially the bank, they need it to assess if you are qualified for facilities. Then the competitor, then we have the public, then we have the government to know how the economy is faring. Then the tax authority also need it to compute their tax. So after that, let's go ahead to qualities of accounting information. Number one, we have timeliness. It should be available when needed. Yes, it should be available when it's needed. Accounting should be available when the management need it, when the public need it, when anybody wants to take informed decision with the account information needs it. The reliability, ensuring that rules and guidelines are neither neglected or wrongly applied. All the rules and guidelines in the preparation of financial accounts should be obeyed. For it to be reliable, it should be obeyed. Then verifiability, that's where the source document comes to play. Should be able to trace where the transaction happened. That legitimize the transaction that actually this stuff actually happened. That is verifiable. You should be able to verify the source of the information you are getting to the source document. The predictive value. Financial accounting is historical in nature. Yeah, the trend in the past can be used to predict the future. The trend in the past can be used to predict the future. Then you have comprehensiveness. Accounting information must be detailed enough to ensure comprehension by end user. Then we have comparability. The basis for the preparation of accounting information should not be changed to allow for comparison. Be able to compare this year financial statements with that of the coming years or the previous years. Like I said, we have the first one, which is timeliness. reliable, verifiable, repetitive value, then comprehensive. Next. Last one, which is comparability. So now let's go ahead and look at the stages in accounting. Now we have the first stage, which is data collection. Then the next one is data processing, and the final one, which is reporting. Then data collection in accounting involves gathering all relevant information, financial information, and transactions that occurs within our business. The key activity here includes a source document, collecting documents that provide evidence of transactions such as invoices, receipts, bank statement, payroll record, contract, and other financial documents. Then the next one is we have data processing. Under data processing, we have data processing is in accounting involves transforming raw financial data into meaningful information that can be analyzed and reported. So what are the key activities here? We have the first one, which is a recording transaction, that's imputing or recording collected data into the accounting system through using a journal entries. Then thereafter we post to the ledger. After the ledger, we do necessary adjustment for accrual, for repayment, for deferral, for depreciation. Then we prepare the preparation of the trial balance. Prepare the trial balance where it summarizes all the balances of all ledger accounts to ensure that account debited equals to ensure that total debit equals total credit. That's helping to identify any error before financial statement is prepared. Then the final one, we have the reporting, which is the last stage of a financial account. It has to do with the preparation of the income statement, the single financial position, the cash flow statement, and equity. Just to recap: data collection stage, data processing stage, and reporting. Okay, let's consider the next subtopic, which is the accounting equation. Yeah, accounting has an equation also that ensures or enables the balance sheet to balance. So the entirety of financial accounting is built around the accounting equation. The double entry principle is the backbone of the accounting equation. It is the application of the double entry on each financial transaction that ensures the balancing of the accounting equation. Key things to note here is that the entirety of the accounts of accounting is built around the accounting equation. The double entry principle is the backbone of the accounting equation. Then also we say the application of double entry on each financial transaction ensures the balancing of the accounting equation. Okay, the accounting equation. The accounting equation is given as assets equal to capital plus liabilities. So let's define these three terms. What does assets mean? Capital, what does it mean? And liabilities, what does it mean? So assets are the properties of a business or company. The company is expected to benefit from them in the future. Yeah. E.g., furniture and fitting, motor, van, equipment, cash, inventory, land, building, even prepayment. They're all part of an asset. An asset is anything or economic resources owned by a company from which economic benefit is expected to flow. That means is anything at all, or let me say economic resources from which economic benefit is expected to flow to the company. Then we have tangible asset and intangible asset. We have tangible asset are physical items that you can touch or see, such as machinery, building, inventory. While intangible assets, they are non-physical assets that still provides a value, such as intellectual property, brand recognition, and goodwill. So, like I said, asset is anything or economic resources owned by a company from which future economic benefit is expected to flow. Example, we have, like I said, I have motor car, land, building, office equipment, and all those, the cash, inventory, then asset, account receivable, prepaid expenses. So prepaid expenses. There are also these assets are divided into two. We have the fixed asset and the current asset. Like the fixed asset, according to IAS 16 is now called property, plant, and equipment. That's what I display on the balance sheet or statement of comprehensive income. We will come to that. Then let's go ahead. They have the capital. Capital is the amount invested by the owner of the business. That the amount you, the owner of the business, invested in the business is called the capital. Then we have the liability. On the other hand, liability is the amount the entity is indebted to. It is an obligation that must be settled in the future through the transfer of economic resources like cash, goods, or services. That means what you're indebted to. For instance, now if you took a loan from the bank to finance your business, that money you took is a liability to you, of which you're expected to pay in the future. Now, let's consider two examples. Example one, let's say asset was given as 100,000, then liabilities 50,000. Then we are asked to look for the capital. What was the capital? All you need to do is just bring up the accounting equation, which is asset equal to capital plus liabilities. Then we're given asset as 100,000. Then liability as 50,000, which is 100,000 equal to capital plus 50,000. So just make capital the subject of the formula. Then capital equal to 100,000 minus 50,000, which gives us capital of 50,000. And that is to say, the owner of the company invested just 50,000 into the company, and the 50,000 was not enough for him to finance his assets, so he had to borrow additional 50,000 to support his business. To the second example, Peace Limited asset as at 31st December 2023 was 1 million naira, and its capital was 100,000. What was his liability? Analyze the question. You invested only 100,000 naira, and you are buying asset of 1 million naira. Where did you get an additional extra 900,000 naira from? Where? It didn't fall from heaven, it came from somewhere. So, solution. With asset equal to capital plus liability, substitute these two value given. So we have asset which is 1 million equal to 600,000 plus liabilities. So now you make liability subject of the formula. Liability come where we have 1 million minus 600,000. So liability is equal to 400,000. It's that simple. Just take your time to look at it. It's very simple. Accounting is one of the simplest courses I can think of. Just have a good foundation. Have a foundation, then you can fly with it. So that is that for accounting equation. Okay, that is all we'll be taking in today's lesson. So in our next lessons, we are going to be considering the principles and practices of double entry. We'll talk about debit, the receiver, and credit, the giver. Okay, finally, we have come to the end of today's lessons. Don't forget to subscribe to this channel and click the notification bell. This will be among the first to get notified about our new sessions and updates. Thank you very much. See you in our next section and lesson. Like I said earlier, please don't forget to click on the notification bell and subscribe to this channel so that you'll be among those that will get notified. And please help me to tell your brothers and sisters, those in school, those in secondary schools, those in higher institutions. They will benefit so much from this lesson because the lesson is going to be taught and it was being taught for everybody to understand. We're teaching this, bringing down to a level that everybody will understand. Please tell your neighbor, broadcast it, tell everybody about it. Thank you. I'll see you in the next session.